You can almost feel the nervous energy in the US stock market right now, can't you? Well, in this explainer, we're going to break down exactly what's causing all these jitters.
So, here's the headline. For 4 straight days, the big U.S. stock indices have been falling. Now, that's not just a blip on the radar, it's a trend, and it's got investors feeling a little on edge. So, what's really going on here? So, what's the real story behind this sell-off? Well, as you can probably guess, it's not just one single thing. There are a few different forces at play here, and it all starts with the big picture. All right, first up, let's just get the lay of the land. We're seeing what you could call a broad market retreat, which means this downturn isn't just stuck in one or two little corners of the market. And look, we're not just talking about some niche sector having a bad week. We're talking about the big ones. The Dow, the S&P 500, and yeah, even the tech-heavy NASDAQ. They're all trending down. This kind of market-wide anxiety points to much bigger concerns. And one of the biggest right now revolves around a technology that, ironically, has been pushing the market up until now: AI. And that brings us to the elephant in the room, what really feels like a modern-day gold rush: artificial intelligence. I mean, it's been the engine of market growth for months, but now some people are starting to wonder if that engine is running just a little too hot. So check this out. A recent survey asked a bunch of investment fund managers, the people handling billions of dollars, what they think. And what they said is pretty telling. A full 45% of them believe the AI boom might actually be a bubble, posing a real risk to the markets. That's nearly half of the pros sounding the alarm. And this isn't just some vague worry, right? That's a direct sentiment from that survey. When the folks whose entire job is to manage risk start talking about bubbles, the market definitely pays attention. But the concern around AI isn't just about stock prices getting too high. It's also about the price tag. I mean, the cost of this whole AI revolution is absolutely massive. We're talking about a truly staggering billion-dollar bill to make it all happen. Yeah, so the investor jitters around AI really come from two different places. It's like two sides of the same coin. On one side, you've got that classic fear of overvaluation, the idea that stock prices have just shot up way too high, way too fast. But on the other side, there's a very real fear of overspending, the actual real-world cost of building this AI future. Because here's the thing, this whole AI revolution, it doesn't just run on fancy algorithms and clever code. It runs on actual physical hardware. We're talking massive, power-hungry data centers. And building those things costs an absolute fortune, which means companies are taking on some serious debt. And now, investors are looking at those balance sheets and asking, is all this spending actually sustainable? Okay, so as if that wasn't enough, let's throw another classic ingredient for market anxiety into the mix: good old-fashioned uncertainty. Right now, investors are kind of flying blind, waiting for some critical economic data that could help them see the path forward. It's a really simple rule, right? When the markets get choppy like this, investors don't want guesses, they don't want speculation, they want hard data, they want facts. But right now, a really key piece of data about the health of the economy is just missing. So here's the situation. Because of a government shutdown back in September, the release of that month's jobs report got delayed. That's a huge piece of the puzzle. It means the market has been operating on incomplete information. So now, pretty much everyone is holding their breath until Thursday, November 20th. That report is so important because it's a major signal about how the economy is doing, which of course influences what the Federal Reserve decides to do with interest rates. And while everyone's waiting for that main event, they're grabbing onto any little piece of information they can find. For instance, the Labor Department just reported 232,000 weekly unemployment claims. Now that's just a small snapshot, but when you're in a data vacuum, even a small indicator like that gets a whole lot of attention. So you put it all together, you've got the AI hype, the massive costs, this economic data vacuum, and it puts the market in a really tense spot. So the question becomes, what's the next move? It really all boils down to this huge dilemma, this massive tug-of-war happening in the market. On one side, you have the incredible, undeniable promise of AI, but pulling in the other direction are three really powerful forces: the fear of a stock bubble, the real cost of all the debt being racked up to build it, and just this general uncertainty about where the economy is headed. And that leaves us with the big final question that really sums this all up. Look, very few people would argue that AI isn't the future. But is the market, in its mad dash to get there, paying way too high a price for that future right here and right now? That's the billion-dollar question that investors are wrestling with today.